Good evening, everybody. Happy Sunday. It is March the 27th, and I hope everybody's having a marvelous weekend. I'm Ron, your wealth guy. Let's talk money. Let's talk Sunday market preview for the week. So before we take a look at next week, let's have a look at what happened this past week, because we got some interesting conflicting information. So first, earlier in the week, we did have some members, I believe it was Powell, came out and talked about how they're going to continue to aggressively fight inflation. Now, we know that's not necessarily true. Even if we look at the books for the Fed, we can see that that is not truly the intent. But on Thursday, we kind of received a little bit of that confirmation. I can't remember which Fed president it was that came out on Thursday, but they continued to talk about how not everybody at the Fed sees eye to eye with Powell in regards to aggressively raising rates. So a little bit of mixed information there. Now, that does confirm the books and the true underlying intention of what the Fed might be doing here. Nevertheless, it is telling us that there is some conflicting opinions as to how the Fed wants to handle interest rates going forward. But let's have a look at what happened with the 10-year yield, because the 10-year yield is actually already pricing in another increase. And now that it's above 2% and consistently above 2%, that might actually be pretty decent for financials. And the fact that it's being priced in already helps prevent any of these spikes that I've talked about in the past in terms of what you should be watching for in regards to a possible major market correction. Now, at the Fed, we do have some people that are still calling, and in fact, some analysts out there are still calling for a possible increase at the next round by the Fed for about 0.5%. Not sure we're going to get that. We are going to get some kind of increase, and I anticipate it's going to be probably another quarter point. It would really shock me if it would be a half, and if it is, I don't anticipate another raise necessarily at the next quarter. But for now, some analysts are saying 0.5%. I'm not. I'm actually going to sit back and say a quarter point for now. Either way, the 10-year yield is pricing in another increase. Now, let's have a look at the markets for next week. So I'm going to skip some of these notes. I have a ton of notes, as you know, I always do. So next week, the markets are going to probably continue on their run. And in fact, last week, I think, since the day before the Fed announcement for interest rates, the markets already started to go up. And I think since then, we've only had one, maybe two negative days, which is an incredible, pretty well straight up run for the market. Now, that is a little bit concerning. I would like to see a little bit of a pullback here. Now, will we actually get it? Debatable, but I think it's important that we do have something, and it could be a small pullback, 2, 3, 5% even, but it's important to have these pullbacks because these straight up parabolic runs are very concerning, because when they go up that aggressively, they can always pull back equally as aggressively, if not more so. So I'm not necessarily saying this week we'll have a pullback, but it wouldn't surprise me if we do start to see some momentum to the downside at some point in the near future. Now, this week on the economic calendar, we do have a lot of employment numbers, and we have GDP both in the US and Canada. Important numbers right across the board. We're going to continue to see how inflation is increasing or impacting the markets right now. Keep in mind that I believe it was Bullard who did say that the current mandate for the Fed is to keep inflation high or up. Crude could also be on the rise this week. There's a lot of additional tensions going on, especially if we continue to look at the Chinese lockdown. And then we also have pipeline and distribution issues from Russia, and whether or not additional sanctions will be placed on Russian crude. Now, there's already expected to be a shortfall. I believe before I had mentioned is about 5 million barrels. It's currently sitting anywhere between 1 and 3 billion. And to be honest, I think that's being very conservative here. If we take a look at commodities, yes, let's take a look at some of the important things that I'll be watching this week. I think commodities will continue to go to the upside. Last week, Friday, we had a nice turnaround from Thursday, which was a little bit shaky, but commodities continue to move to the upside. Taking a look at precious metals, we may see an additional bump here. I'm not really looking for aggressive moves to the upside with the precious metal market right now, but I do expect that precious metals will continue to march in the very near future. I'm definitely not seeing a pullback, at least for especially gold, possibly silver, silver. As we know, it's a very heavily manipulated market. If we take a look at cryptocurrencies, which I mentioned on Friday, looked like it was going to be the start of a really good setup, and in fact it was. So over the weekend, Bitcoin in particular has moved up roughly another 2,000 points, or $2,000, sorry, and is currently sitting above 46,000. So it was a really good setup. We'll see if it continues to hold at these levels, and if it does, it could be a really good continued sign here for cryptocurrencies, Bitcoin in particular, but right across the board. If we look over the last 24 hours in particular, we can see that cryptocurrencies are sitting comfortably in the green. Other areas I want to watch, always that 10-year yield. We want to see if there's going to be additional spikes. If we see an aggressive spike, as I always mention, that could be an indication of some potential rough times ahead for the market. But for now, as I mentioned, we're going to sit above 2%. The markets are playing that. Fantastic, I think, for financials. So if you are looking at financials, there's an opportunity there to continue to buy if you haven't already started. And I'm doing that myself, to be quite honest. The other thing we want to look at, the Dixie. The Dixie is a lot higher than I expect. Especially with inflation the way it is. But for now, we're going to expect it to be a little bit higher than where you would hope it would be or where you would expect to be. And I think that trend is going to continue for at least the next or foreseeable future. One last thing I want to point out here. There's no real major news in the market aside from day to day. We know that the Russian war will continue for now, and we also know that there is a lot of external factors that could impact the market through the week, especially, as I mentioned, the economic calendar. However, I'm not really seeing anything that is immediate in terms of impacting the market either to the down or to the upside. So I'm going to say the trend is probably going to be to the upside this week overall. That's it, everybody. I will see you tomorrow morning at the opening bell.